Aloha and good morning, everyone. As I make this Monday evening on Maui, futures are once again, like it matters, up after hours, but by the pre-market, like I always say, and like it's been proven over and over lately, we'll see what happens in the morning. But even though that we rolled over the strong futures after hours gains 24 hours ago, got that week open. We had a great intraday session, but once again was just completely ruined by another weak close. And I tell you what, the lack of follow through in this market is pretty discouraging on a standalone basis. But if you really look underneath, my long positions, I should say, our long positions, the website continues to do great. We have once again very few end of day sell signals. If you check the website out, a handful total, and most of the long positions are working well. I had 9 new long positions for Monday. Only one failed completely. The highest quality fundamental stock, Wage. Besides that, half of SRNE failed, half of HIVE failed. Both stocks reversed to close in the upper portion of their ranges by the end of the day. There's SRNE and there's HIVE. So great turnarounds. Only Wage was weak by the end of the session. So overall, with that kind of price action, it's kind of encouraging despite the discouraging price action in the overall market. So we'll see what happens following the terrible close on Monday and overall lame session on Monday with the Russell 2000 lead to the downside. I do have 3 new long positions, but they're all speculative, so trade accordingly. And I want to make this very clear. I'm working with a $500,000 portfolios here. If you have like $10,000, $5,000, $1,000, heck, even $25,000 only, unless you're paying $1 per commission through Interactive Brokers, it is not the time to be trading. None of my signals that you're looking at have I ever said they're great. This is a great setup. Oh my God, price is right on top of the 5, 10, 20, 50, and 200-day moving average. Max green bop for the past 3 months with no red bop for the past 9 months, and perfect tight price consolidation with huge accumulation and no distribution. Zero of those charts are available right now. So unless those kind of charts are triggering long signals right now, if you have limited capital, pay more than $1 commission. That means if you pay $5 commission through E-Trade, $5 commission through TradeStation, $5 commission through TradeKing, you probably shouldn't be trading here. My market models are under neutral conditions. The market is showing no signs of following through on any gains. And a lot of the setups, while very, very good with excellent reward to risk ratios, they're still very risky because of the market. So keep all of that in mind. So this evening, 3 speculative long positions, all 3 are different. The first one I want to go over is ABIL. This is a oversold RSI 14 swing trade turned momentum swing trade following the support here near the 50-day moving average and the 105, 107, what's this right here, support levels. This was 97. So anywhere between 107 to 97, the support range right here, which happens to be right above the 50-day moving average and just above that powerful initial move off the June lows. So ABIL, I want a momentum play here. We want to go long. Limit order 114. First cut loss 105. You could use 107. Monday's low a day. I just happen to be using 105 personally. Final cut loss 97 for me. Moves below 97, I'm all out of ABIL. You could also use the 50-day moving average. It depends on what you want to do. If you, let's say, if you have, let's say, $100,000 and you put only $1,000 into this, then sure, maybe you use 105 and 97. But let's say you only put like $100 in this, and you want to give it some room to work, maybe you only have one stop at the 50-day moving average. It's up to you. You need to look at these long positions and decide what works for you. None of these are safe. ABIL is speculative. 114, first stop 105, next stop 97. First profit target are these highs right here. Then next comes the 200-day moving average. Then next comes the early 2017 highs. So the reward risk ratio is there, but the inherent risk is quite large if you invest a lot of your capital. So for me, like I said, working with $500,000. Me, how much am I putting into ABIL? perspective, $1,000. That's it. So we'll see what happens. 114 limit, 105, 97 stops. Then next is SPEX. SPEX starting to round out that hook, that curl, following a huge move. This is a Fibonacci retracement play. I hate the Fibonacci retracement on Telechart, but let's see if it works on this. What am I got here? Wow. Let's see if this works. It does. So you can see right here, intraday reversal. Broke through the Fibonacci retracement line, bounced off of it. After a strong move, pulled back, lower volume, starting to get that curl in price. Max Green Bot confirming the candle over candle close. Want to get along SPX, 257 limit. First stop 232. Second stop gap fill here at 223. However, I may change my mind. I might change my mind at 223 and might decide to use the closing price of 191. It depends on if or if not it violates 232 and how it violates. This is a speculative trade. I'm looking for SPEX to trade from 257. First target, 475. After 475, the next target, it's not there. God. 475. It's hard to do these charts. Next target, 893. So I'm looking for a huge move in this stock, not a small move. So once again, huge possible reward to limited inherent risk. But once again, if you use too big of a count size per this trade, and if it doesn't work out, don't blame me. Blame yourself. You overcapitalized into a speculative position, and once again, you're taking a trade during the summer, during the seasonally and historically weakest 6-month period for stocks, in a market that's under a neutral condition with no follow-through in the indexes. I'm okay with my trades. Once again, $1,000 into SPEX. Nothing more, nothing less. 257 hits 232. I start cutting losses. Now, the one position, trend following position, that's actually decent, EVRI. EVRI was only in my Max Green Bot for 5-day scan, and it was confirmed in my tertiary scan that looks for any stock on above average volume with Green Bot up on the day. So EVRI did that. Once again though, nice pretty pattern. Nice beautiful previous uptrend from these November lows. Looking back in November intraday, it hit 121. Now we're all the way up to 746. So this stock has a potential if it wants to do a measured move. Hell, even if it wants to do a measured move from the gap up move to just those recent highs, we're looking at an 83% move. And with a total risk inherently on the position of 9%, we're looking at 9-10 to 1 reward risk ratio. But once again, is the setup perfect? Absolutely not. Do you see red bop in this chart? Yep. Do you see above average red volume? Yep. Do you see max green bop for the past 3 months? Nope. Beautiful move off the 50, right? Yes. Beautiful move with the 5, 10, and 20 all stacked, right? Yeah. But do you see the real body of this price candle? Do you see how it's above the 10, 5, 20? Technically, it makes it a little extended, slightly extended, because it's not, the real body should be, the 5-day moving average should be inside the real body. Nice off the 50, right? But where is that 200-day moving average? It's not like it's right below the 50. The 200-day moving average is extremely far away. So the stock is not symmetrical to its previous uptrend. Look at that move. Even look at that move. The only way it's symmetrical to is this little move right here. To be symmetrical to this move right here, we're going to need this thing to base for at least a couple more weeks. So keep that in mind. The play for me, EVRI, going along 1% of my account capital, limit order, 746 since it's trend following. First cut loss, 686. Final cut loss, 673. Keep it simple. Aloha.